while these other big tech companies that are already making money are going deeper into the AI game. Meta, Apple, Google, and then the new kids on the block that you keep hearing about, OpenAI, which has ChatGPT, and Anthropic, raising a ton of money. So there's a collective bet on AI that now is the US economy and stock market, and it all kind of happened pretty fast. So then we turn beyond the people who think this is the way to make money, or Donald Trump, who's been very cozy with these people, to a wider set of reporting and analysis. There are doubters in the markets, of course they call that bears or skeptics, and they are looking at this. Journalist Ed Zitron is probably one of the foremost independent expert bears. He's done the reporting and work, and it's led him to these warnings that AI so far underdelivers and that financially it's overextended. If anything, looking at an economy that has a host of challenges, he said maybe we should let AI burn because the industry is losing money so far. He's also written what he calls haters' guides to some of these AI companies. So where he's coming from is skepticism, and he has now, in a land where many people are just trying to make money off the hype or kind of stamp AI on anything, and we've seen the backlash to that in labor among students and young people, and a lot of Democratic candidates, frankly, are pushing against the data centers. But Zitron has become the leading expert voice on the bearish case against AI.
Large language models are not the future. The only reason big tech is investing in this is that they've run out of hypergrowth ideas.
OpenAI is a load-bearing fail son.
What do you make of Zuckerberg's editorial?
I think it all exists to distract from the fact that Meta will not disclose its AI revenues.
They can just sink that cash into more and more investment.
The problem is that's slowly not becoming true.
Everyone is being sold what I consider kind of a lie. It's honestly kind of a scandal.
The Super Bear, Ed Zitron, joins us now. Welcome.
Thanks for having me.
Great to have you. You're making a name for yourself.
Yeah, I mean, it's funny. People really don't like the skeptics' view right up until it's important that everyone listens. And I think now that it's becoming alarmingly obvious how much money is being lost, and indeed how little other revenue exists outside of OpenAI and Anthropic, suddenly everyone wants to listen.
Yeah, well, we showed you've been called upon a lot of places. You're making your debut partly for that reason. So we think folks should at least listen to you tonight, make up their own minds. Let's jump right in to one of the key problems that you were early to spot, which is if this stuff is so great, why does it need so much subsidy? Why is there what they call this circular financing? One outlet said one of the big chip makers benefits from nearly every stage of AI infrastructure spending. Investors worried this ecosystem becomes too circular and then interconnected, or on Wall Street, as I mentioned, they call it technically circular financing because the snake is eating its own tail, which doesn't usually work out well. I also want to note that chip maker CEO at NVIDIA says it's not actually circular. So what is your view, and why is it important to them to deny that?
Well, I mean, NVIDIA is invested in OpenAI, Anthropic, CoreWeave, one of the largest customers. It's backstopped data centers for CoreWeave. It's backstopped CoreWeave's leases. It's invested in a company called Poolside today to basically hire away most of their staff. It seems that whenever anyone actually tries to make money in this, they get a bunch of money from NVIDIA, raise debt to buy GPUs, and then, well, nothing else happens because it takes 18 to 36 months to build a data center. And the only two major companies, OpenAI and Anthropic, they are pretty much 90% of AI revenues. The information reported 89%. Worse still, they make up, according to UBS, Wells Fargo, and Barclays, more than 70% of all hyperscaler AI revenues. This means that AI is a single-digit billion business in an industry that has spent more than $1 trillion in capital expenditures in the last 4 years.
So just to slow down or unpack what you're saying, is we hear a lot about this quote unquote revolutionizing everything. I mean, that's the rhetoric. And you're saying on the business side that whatever that is, however much people believe that, that's mostly going through two doors. You're saying Anthropic, which was recently fighting with the Pentagon, OpenAI, which has buddied up to Trump through Sam Altman, we've heard about that. You're saying it's going through those two doors, and neither of those doors are remotely profitable yet.
Yeah, I reported a couple months ago that OpenAI lost $20.9 billion in 2025. These companies lose tens of billions of dollars, and they are now they're the largest customers of AI services and compute from the hyperscalers. Now, here's the problem. Hyperscalers are dependent on that revenue growth, on that spend from Anthropic and OpenAI to keep growing. Analyst estimates are expecting that. And the funny thing is those expectations can only get met in a world of unlimited resources where Anthropic and OpenAI can raise, $217 billion this year alone.
Yeah, we'll jump ahead. We had that for later, but we'll actually show your bar chart. It's not apples to apples, but this is built on the data you mentioned. So we'll jump ahead to that. When you say hyperscalers, you're talking about these big tech companies that we know, or they sometimes call that the Mag 7. And you're saying here, roughly, in half a year, they're doing 10x, 200 billion, compared to what Amazon did over many years. When people make the counter argument, they say, well, Amazon was not profitable at first. Can you walk us through these numbers?
Absolutely. So, everyone talks about how Amazon Web Services, one of the most successful and profitable tech businesses in the world, how they were losing money at first and it cost a lot of money. Well, between 2003, which is the year it was created, and 2015, the year that Amazon Web Services became profitable, Amazon, writ large, so not just the server stuff, but also the logistics side, spent $29.7 billion in that entire period. Anthropic raised $30 billion in February. These companies burn and spend so much more money. And on top of all this funding is the $1 trillion+ spent by companies like Microsoft, Google, Amazon, Meta, and Oracle. Oracle has a very real chance of dying as a result of getting in bed with Sam Altman and OpenAI.
Right. And Oracle, that's Larry Ellison, who we've been reporting on, who was on the first full day of this presidential term, was at the White House, and he's sort of tied himself in. And that goes to the thing that, Ed, you think about this constantly. A lot of other people don't. They think about their lives, gas prices, maybe the midterms. Our audience loves, we track elections. But if you're right, and I would even say if you're half right, if you're going in the right direction, everyone's going to care about this, because they could very well topple the stock market in a way that then demands a bailout. And we know what that looks like. I want to remind people how this looks. Here we go.
OpenAI's charm offensive seems to have hit a bit of a speed bump after implying that the federal government would serve as a backstop for the company.
And this all comes as people question how the company is going to pay for that $1 trillion plus $1.4 trillion in commitments over the next 8 years.
White House AI and crypto czar David Sachs is pushing back hard on the idea of a federal bailout for America's leading AI firms.
So if you're partly right and this goes pop, would you say that the push from these people who have been very tight with Trump and certain people in our government, the push for a bailout is sort of low, unlikely, medium, or high risk?
I'm sure they'll try and get one, but the thing is, this isn't something you can really bail out, because it's not just OpenAI and Anthropic dying.
3 wishes to be exact. An ixnay on the wishing for more wishes. That's it. 3. 1, 2, 3. No substitutions, exchanges, or refund.
We are about to create a genie that can grant any wish.
There you have it. From mythology, fantasy, children's stories, to one of these tech titans at an AI company, Altman, saying they will have the genie level option. No word on whether they will limit you on the wishing for more wishes. And we have this claim coming across from more than just one company. Those big tech companies, what our guests call the hyperscalers, include Meta's Facebook, where Zuckerberg might be viewed skeptically as he's gone from the metaverse to AI as a kind of savior for what his company's future could be. He's had other controversies, we know. And let's look at his trajectory and the criticism he's faced, including from our guest, a prominent co-founder.
I will get it under control. I will call someone and see what the next move is, but this is going to be news now.
I'm a free speech absolutist. I'm not the one who's lying, and I'm not stopping them from seeing someone who is.
I hope that we will get to a point with AI where you can write verifiably secure code.
I worry about a bubble in that space with so much money.
Jokingly, some might call you a class traitor.
Well, if so, I think take it as a compliment.
That last voice is Chris Hughes, now chair of the Economic Security Project, co-founder of Facebook. He's been on this program before and drew a lot of interest in the so-called tech power when he wrote in the New York Times, "I co-founded Facebook, it's time to break it up," discussing how it was one of the tech companies that had just grown too big and powerful that predates this AI boom. Chris Hughes joins us along with the newly dubbed Super Bear, Ed Zitron, who's back with us. Chris, what do you see here, especially with some of the now older big tech companies, including Meta, and this sort of set of AI issues we've been discussing?
It's a free-for-all, Ari. I mean, the amount of investment capital that's pouring into this space is incredible. Now, I may not be quite as bearish as Ed in the sense that I think that the technology is meaningfully transformative, and it is having an effect on education, the workplace, how we live, even how we